Welcome to our weekly briefing, weekly ramp up. Actually, it could be said, I could say that it's also a monthly wrap up since it's 20th of May. The last the last officially the last day of May is 31st, but it's actually Monday, so we have the weekend in between us. But yeah, we have seen actually preparation of the month end so far today, because it's the month of, as I said, end of May. So we are entering the final month of the second quarter officially, as we're going through to June. So I would like quickly to check whether everything is okay, whether Facebook and YouTube works okay. So let me double check the sound as well. Yep, sound, audio is fine. Excellent. So we are ready to go. Actually, I can see that we are right now live in every single social media that Hot Forex is actually handling. Excellent. So guys, it's your time, as I keep saying and keep reminding you. As many things you want, we will go through the markets as usual, as we keep doing every single time. I will be able to see your questions and to reply within the live. Now, hello everyone. Hello Sumit. Hello to you, Fi. So, okay, guys, a quick briefing. Okay, you might not know, but as we keep typing and saying in our morning briefing, today's data is very significant. Is the most favorable data for Fed. So after that mixed report from the US yesterday, with jobless claims higher, headlines a bit softer, but in general an overall strong report from the GDP as well. So a mix, however, US report. Today, it will be interested to see whether the odds will increase on a possible or a potential rate hike for the Fed. Okay, especially after we have seen other central bankers in their comments recently being less dovish than what we were expecting, at least for the second quarter of the year. So, for example, RBNZ, the governor, or actually keeps the rate hike on the table. The same stuff from Bank of England. So, it will be interesting to see whether Fed will follow if today's data suggest that it's time for a rate hike. So, hello everyone. Hello from Singapore. Oh, I haven't seen Singapore for ages. I haven't seen anyone from Singapore for ages. Okay, hello from Indonesia. Hello. So, you will probably have my dearest friend Adi over there, our market analyst in Indonesia. A great guy, an excellent market analyst. So hello everyone. Okay, why market fast move now? Okay. Let's go. Let's check together what's going on. Actually, we are just 3 minutes away from the data, dear. So this might be a reason why we keep like some pricing ahead of the data, some positioning ahead of the data. So this might be one of the reasons why the market moves fast right now. So we have a strong dollar so far, a very weak New Zealand dollar after the comments from Mr. Orr that the rate hike is on the table. Even though that sounds a bit bizarre from the theoretical perspective, yes, but so far indeed we've seen dollar spiking higher. Let's see it together actually. Okay, we have the MT4. Excellent. Let's shift to the over here. I have gold, but let's start with the majors, and let's start with the sorry, with let's start with dollar, since we are waiting for the PCE from US. So I want to make sure that I have my headlines over here just in case, and my calendar as well. Okay, so we are ready. Just 2 minutes to go. So, as I was keep saying, guys, this looks to be on the anticipation of the data. Since yesterday, we have the theme of reflation trades, especially after Mr. Biden announced, the Biden administration announced sorry, cannot see your questions for some reason. Okay, here they are. Now I'm on it. So yeah, after Mr. Biden yesterday reported the 6 trillion for fiscal stimulus, so a huge support for actually achieving its infrastructure spending, its infrastructure plan. The stimulus, along with the anticipation of the PCE today, caused a lot of reflation trades so far today. So in general, we have seen the market so far today moving higher. So we have seen dollar over here 90.32. That it was that followed the rise in longer dated treasury yield. So we had 10-year treasury yields rising higher, lifted from Mr. Biden's 6 trillion stimulus. We have seen, actually, we had also a good equity market so far today. The European equity market started quite higher, or open quite higher, well supported. Okay, so that was, of course, due to the early data that we have from Europe, that actually we had we had actually, let me double check, we had the consumer confidence and the ESI that supported the euro and the European stocks in general, because they show an overall picture that Europe is actually getting stronger, strengthening, and there is a broadening in the recovery as well. And along with the stimulus hopes, this is what supported the market so far today. DAX, FTSE, Nasdaq, Dow Jones, Nikkei spiked higher more than March 2008, if I'm not mistaken. It was a big jump from Nikkei as well. So, are data out? Let me check. They should be out. Come on. Yes, they are out. So, let me put the 30 minutes chart just to follow what's going on, or even the 15 minutes chart actually. So, data just came out, okay? So, let me read the breakout of them. So, I don't know whether I can share my screen as well, but okay, PCE. So we have the personal consumption expenditure in line with expectations in a monthly basis at 0.6%. The core PCE, the core personal consumption expenditure for April, came above expectations, 3.1%, and actually revised higher as well. And the nice surprise, it was personal income that actually contracted, but they came below of what was expected. So they came out less than what feared. Okay, so personal consumption in line with expectations, grow in the yearly basis in the core report, in the core release 3.1, but there is a disappointment on personal consumption, unfortunately. So okay, yeah, so we don't have a clear reaction yet. We can see that a bit of a pullback on the announcement. So not neither a strong, neither a very disappointed report today, but neutral, I will say. What is really negative out of this report is the personal income that has been detected. It has revised lower as well. But overall, if I'm not, hopefully I haven't missed something, but as I can see, it's an overall good, neutral to, it's a relatively okay report from US. So the fact that consumption expenditure remain intact, okay, and the fact that remember the personal consumption expenditure is the amount of money, okay, the amount of money that people, all of us consumers, are spending every month. So if this number is growing, that suggests that, okay, things are going quite well, economies are reopening, so people are out there spending, buying stuff, buying goods, buying services, so the economy started to move. So that overall, I will say this is a quite positive report. So it could, or it should help dollar, because that's an indication for Fed that it's so far accommodative, ultra accommodative policy had a positive impact, okay? And the fact that the vaccines in the US are rapidly on the move and they keep vaccinated people. I don't remember the exact percentage so far, but they had some good numbers from vaccination perspective. Also, the stimulus that the extra stimulus that Mr. Biden reported, along with the so far recovery, the data and the recovery signals that they are giving us, they should help Fed pausing this ultra accommodative policy that is holding right now, and potentially could proceed to a rate hike. So for the time being, all I can say from the data perspective is that this is a touch on the strong side. This is the data overall, okay, overall they are positive. They are giving a recovery vibes. Okay, so yeah, so this report back might be like people pricing in that bracing actually, or pricing in for something worse, but actually that wasn't the case. That is not the case. I would be quite surprised seeing the dollar depreciated today, because that was a strong report. But who knows? Who knows? It's all about the sentiment after all, right? So dollar had a put back down over here prior to the data and initially on the data. Right now, it managed to get back, okay? But let's wait and see. Let's cover other assets to see the overall analysis, since we have the data already out. But before we do that, okay, let me check whether you have any questions. Oh, you're replying to each other. Okay, that's nice, guys. I'm happy that you have interaction between you. Okay, it's good. It's good to have to know people that they are trading. They are traders. They like this industry. You can share your thoughts and your ideas. So that's quite good. Okay, I like seeing this interaction. So. Okay, Stuart confirms me that everything is okay in regards to the audio and visual. So guys, please tell me which assets you want me to cover until I got any feedback from you on what you want to see from me today. Okay, I will quickly make a briefing of what happened, what's going on so far, okay? What actually we have seen during the day other than the PCE data. So remember, US data came stronger than expected. We have a bit of a drop in the personal income, okay, a bit of a drop of what was the forecast, but overall the today's report is actually presenting that the economy indeed has reopened and people started spending and started buying stuff. So there is a climbing spending, slow one, but there is. Compensation increases as well, with wages and salary income higher. So we'll see more on the NFP next Friday. But overall, a nice report. But however, someone asked, who was it? It was I will get back to Aziz's question, why market moves so fast prior to the data, and since early this morning, what actually turned where our attention was mainly turned, it was on the Europe and the European data, and some very important speeches from several officials. Okay, so we have seen actually, I will show you euro dollar in the meantime so you can follow me. We have seen this drift of euro dollar, okay? Of course, one narrative of that drift is, of course, the stronger dollar. But we have seen in general, we have seen we have seen some reports, some officials, ECB officials, for example, it was Sample, was it? Let me double check. We had several officials actually speaking. Yes, it was Mr. Snampel, who said that rising yields are a natural development at a turning point in the recovery. So that actually strengthened the possibility of ECB trying to actually it stopped the so far actions that ECB, when ECB was trying to count down to talk down rates, and is starting to lay the ground for a pivot in a policy as economic activity strengthens. So we have the opposite picture of what we have seen so far the last few weeks. So far the last few weeks, we have seen ECB officials trying to calm down the market, saying that no, we will keep policy unchanged. We need to see a substantial change. We need to see a substantial recovery. But this week, we had the vice versa scenario. We had ECB officials suggesting that turning more optimistic and suggesting that this is what we expected to see, and the rise in yields is a natural development of a turning point in the recovery. It's like they are pointing to a more optimistic more optimistic side of the European zone, the Eurozone of the European market, as inflation expectation rises, they might change their policy if economy continues to strengthen. So, yeah, this actually, okay. This could change the expectations for ahead of the ECB's meeting in June. Right now, we are actually expecting the forecast so far today for ECB is not to change the policy, not to change the interest rate, but is expected to scale back on the monthly purchase volumes again within this unchanged PEPP envelope. And I'm referring hopefully you are familiar with this term. I'm referring to the programs that they have established in order to support the economy, the bond purchases. So we are expecting to scale back the monthly purchases because of this recovery, this signal that there is a we're doing some small steps to a recovery. So euro dollar now, since I'm showing euro dollar, drifted down to 120, 135. Okay, and this has to do mainly with with Mr. Biden and the anticipation of PCE, which actually already came out. So this, as I said, the fact that the anticipation of PCE and Mr. Biden yesterday gave a boost to treasury yields. So this has as a consequence the lift of US dollar, and that's why we have seen dollar turning lower and being unable in the near term to benefit from the improving outlook in the Eurozone after we have seen confidence, consumer confidence today, ESI, German. Actually, we had also German import today, also all these. So despite the data that should have support the euro, because of the stronger dollar, euro dipped lower, posting this 121.37 low for the time being. Um, but guys, okay, but have in mind, okay, we have this dip, but overall, look at that. This is a daily picture. Overall, euro dollar was in a rally since the end of March, okay? So from the one hand, we have euro that is backing the recovery story so far today, but from the other hand, we have the US situation with the unfolding inflation story, right? With the inflation story and the inflation concerns. I lost you again. Here we are. So we have from the US, we have the inflation, as I was saying, story, which will be key for the dollar medium and long term direction. Okay. So the dip today cannot really confirm a reversal of this long or medium of this 2 months rise. So okay, so if we just speak technically speaking, as long as we don't see the asset turning at 120.50, which is the 38.2 Fibonacci level on the last 2-month rally, then the overall outlook for euro dollar doesn't change. Okay, but yeah, the key will be inflation. The dominant prevailing view on inflation risk is what could pressure the prices. Okay, and is what will what could continue to weigh on the dollar. Okay. So now, since I'm in the overall picture, I would like to inform you something that is in for the long term. You might not want to hear about it, but for the third quarter, okay, we are expecting actually the inflation risk for the US to keep the short-dated treasury yields quite to the downside, with the Fed on the other side is expected to hold out on the quantitative easing and the ZERP program. So also the markets, if you check the Chicago Exchange Fed Watch tool, is actually suggesting that the market is positioning a probability of a 25 points Fed hike by year end. So not right now, not in the second quarter, not anytime soon, but within the year, by the end of the year, more precisely. So for the near term, it is still expected that the Fed will not change its rates. So that could keep the dollar in a less favorable position than the euro. So remember, euro dollar, okay, euro dollar. Euro dollar futures in general, if you check the euro dollar futures, you can see that the markets are actually have been positioned for a first rate hike back in 2020 in 2023, not even in 2022, and not within the year. So this is the current situation so far. So this could provide further upwards bias for the euro dollar in the long term. Right now, however, of course, have in mind that any move of Fed sooner than what expected will change all this positive bias for euro dollar in the long term. Okay, that was in the long term, so I will not speak again for the long term because otherwise you get boring. But remember the differential between the Fed and the ECB. Remember these differentials. For the time being, the long term for euro dollar remains to the upside. Okay, however, there is the downside risk if the Fed proceed into a tapering earlier than what is expected. Okay, so we have some near-term downside risk. So now let's focus. So key for the long term would be this 120.50 territory. Okay, guys, 120.50. Now, intraday, we have seen that the sell-off continues. This is the 1 hour chart, guys. And you can see that MACD over here. You can see, I'm in front of it. Okay. Let me show you stochastics first. Okay, you can see now. MACD extending lower. RSI just crossed the 30 area. So there is further area to be covered. My fast moving averages 5 and 9 exponential keep pointing lower, even though the asset has already touched the third support of the day. Okay, even though it looks oversold, it's outside Bollinger's. It touched the third support. The momentum persists. The negative momentum looks to persist. Let me check in the 30 minutes chart. Okay, negative, RSI down, stochastic count down a bit, is a bit sideways, and we have seen a bit of a support in the 30 minutes chart, so it might ease, but because of, as you can see, the fast moving average are keep pointing lower, they don't suggest a consolidation yet. We have still some downside bias in the near term future. So if the third support breaks, okay, let me zoom out a bit. Then, okay, guys, I will use my Fibonacci expansion to check together the nearest Fibonacci levels, the nearest support levels. So if the third, it's a bit of a messy chart, I will just delete the old one. Okay, here we are. Okay, if the third support breaks, which is also coinciding with my 161 Fibonacci extension, the very next one is at, if I zoom in, it's at 121.18 is my 200 exponential extension, Fibonacci extension. Next, immediate support for those that are interested in the near-term analysis, intraday analysis. While if I go back to the 1 hour chart, I have, let me double check over here, exponential, okay. Is this exponential as well? Let me confirm that okay, no, it's not. we have a clash of the two exponential moving average in the 1 hour chart. I was wondering whether this will end up with a bearish cross or not. But yeah, what I was saying, so next support at the 200 extension, and the very next one will be the round 121 level. Okay, if 121.35 breaks, the next support is at 121.18, and the very next one will be on the round 121 level, or even at the 261 Fibonacci extension, which is just 5 pips lower, 121 to 120.95. The next support if the asset continues this sell-off. Okay, so hopefully I replied to your to the euro dollar. If anyone is interested for euro dollar, guys, stop spamming me. Okay, I missed your questions, guys. We'll have 2 questions. Okay, dollar CAD. Let's shift to dollar CAD. Okay, so dollar CAD spike higher, recovering nearly the 70%, I will say, but I will measure just to be on the safe side. I'm quite right, actually. It's more than 61, so it's nearly 70% recovery from yesterday's dip. Okay, 121.18 right now. They're hitting, turning higher to the first resistance of the day on the strongest dollar, the stronger dollar. Let me check how dollar is doing. Dollar is extending. Boom. Okay, so it already broken the 61.8 level, so Fibonacci extension actually, which was a strong resistance level. So the next resistance to be seen actually for the asset, other than the second resistance of the day, which is up here at 121.70, it's far away. What will be key is a retest on the Wednesday's peak at 121.40, if I'm not mistaken. Let me double check. 121.40. Let's round it up. Is the next key resistance level as the moving averages in the 1 hour chart still pointing upside, still sloping higher. RSI still sloping higher. Stochastic, let's see stochastic, our fast stochastic crossed higher, and it skipped. Actually, it didn't put down or something. It's still rising. So okay, MACD is neutral, but overall we have 1, 2, 3 indicators suggesting more near-term positive bias for dollar CAD amid of the stronger dollar. Now, next question, gold. Okay, so we have a full recovery of gold. Thank you for bringing that up, Mr. One. So, okay, here we are. Let me double check also the headlines just to make sure that nothing else happened other than the data. Don't want to miss it. So I will put the 30 minutes chart, Mr. One. So remember, though, ahead of the data, we had strong dollar, and we keep having strong dollar, but that strong dollar drifted gold lower. Okay, now however, even though we're still having an overall strong dollar, the dollar gains are keep pointing to the upside, we have a reversal on the gold. Okay, don't forget that gold is a non-yielding asset, is a safe haven. So after the data, okay, we have seen a rebound on gold. So I'm not really sure whether this is due to the rise in the treasury yields or more of a safe haven flow into gold. But trade what you see. This is what we keep saying. Don't try to explain everything. You can't, because we have so far, and we keep having strong dollar. If I just shift to the dollar, to the dollar, chart, you can see that it keeps pointing higher, even crossed the third resistance of the day, and is keep extending. Okay, breaking even the, getting back to last week's high, 2 weeks highs, back to 30th of May high. Okay, even though we keep having strong dollar, gold is turning higher as well. So this might have to do on its uh, on its characteristic as safe haven, but don't try to explain, guys, everything. Stick on what you see. So we are in the 15 minutes chart. Okay, we have a nice strong rebound above the first support of the day, retesting the pivot point of the day so far. Okay, stochastic turn positive, keeps pointing higher. RSI keep pointing higher. So in the very short time frame of 15 minutes chart, we have a positive bias. Let me get back to the 30 minutes chart though. So things over here remain neutral, because even though RSI turn higher, remains below 50 territory. Even though stochastics, even though the asset rebounded, it is retesting the pivot point of the day, it remains below the pivot point of the day. So we want to see a breakout of that. Fast moving average are flattened, are actually clashing, so they don't give us an indication yet. They're giving us only indication of a possible consolidation. They don't give us a direction. MACD is below zero still. So we cannot really, we need to wait to see what will happen to gold, because for the time being, after this boost on the data, we don't have a clear picture of what's going on. Everything has been flattened. Yeah. So we need to wait a bit, I'm afraid. So it's looking to pull down again, but we don't have a confirmation on something, so we need to wait at least for this 30 minutes candle to close. But just to help you, my dear one, okay, the key support remains on the first support of the day, because it's also a triple fractal. Okay, 118.88. So if you are in a 1 hour chart or 30 minutes chart, we need a decisive break and a closure below that level in order to suggest that they will keep moving lower, and it could retest either the today's lows or even lower to 1871. So far, we have seen that it retested. It actually broke in the first support, but it didn't close below it. It came quickly higher. So we need a close below the first support in order to suggest that the decline will continue. For the time being, unfortunately, gold remains in a sideways movement since 26th of May, since Wednesday. Hopefully that helped you. By the way, overall, gold indeed stuck on the highs that we have seen the last 2 weeks, the last 2 weeks actually, but we have this golden cross over here of 50 and 200 exponential moving average. We have strong MACD, we have RSI at 73, suggesting that there is overall positive bias for gold. But as long as it doesn't manage to break and to get back above, to move away from the 19,000, we might see this rally ending. For the time being, it has entered consolidation mode. Very small doji candles, sideways candles the last few days, unfortunately. Hello, O'Neill. We have seen that, O'Neill. We have seen, hello, Oz. Hello, Dada Prashad. Hello, Khan. Oops. Okay, we have a question. What's the impact of the US data on the pound yen? Okay, very good question. If I am guessing that from the reaction of gold, I'm guessing that yen as a safe haven actually should had oh, it didn't move. I was expecting it to react the same as it was with gold to be as a safe haven, but apparently it didn't. Let me just out of curiosity, let me check dollar yen first. But the US data should support dollar, so the dollar yen should move higher. And this is the case. Yes, indeed. So this is the case. This is the dollar yen, guys. Okay, not pound yen. It's a dollar yen. It's higher, 110.20, breaking the first support of the day. So yeah, so strong dollar continues to support for the time being the dollar yen, but it looks overbought. It's outside the Bollingers for 4 hours in a row. Let me check my settings on the Bollingers. This looks much better. Yeah, still out overbought. So it looks overbought. We might see a correction because of this overbought situation. But yeah, the US data should support the dollar yen. Now let's flip back to Michael's questions to the pound yen, which is the most volatile index ever in the world in the currency market. So apparently we have a muted reaction. I'm guessing, or I cannot really explain this, but what I'm thinking right now is that from the one hand, we had strong data yesterday and today as well. And from the other side, we have the concern and the worries whether this will indeed bring rate hikes earlier than expected, not like what the markets are positioning to be in 2013. Okay, so that is causing a lot of indecision whether yen should be, whether we should see safe haven flows in yen or not. So it's also the pound, however. Okay, it's also the pound that from pound side we had. Oh, sorry, to drink some water. From pound, let's not forget that we have Bank of England officials today. Excuse me, guys. So, as I was saying, from pound side, we had Bank of England policy makers actually sparking speculations of an early rate hike. That happened yesterday, but this is something that caused a sharp sell-off on gilts. Okay, so that's why we have seen also pound sharply lower. Dollars, strong dollar, but also the yield sell-off and these speculations from Bank of England, but mainly it has to do with dollar. But nonetheless, since we are speaking about pound yen, this indecision, one hand, we had strong US data. From the other side, we have Bank of England officials stating for an early rate hike. From Bank of England. From the other side, we have Bank of Japan. Okay, Bank of Japan today, actually, very early in the morning, reporting that despite the lockdown, they will extend. They are actually near to extend their pandemic relief program. Okay, that was something came out very early in the morning. So what that means, it means actually that Bank of Japan might might proceed to might mute an extension of the pandemic relief program. So what that means, it means bond purchases. Okay, let's not forget that. So this actually is something that lifted, that boosted Japanese Nikkei higher. We have seen Nikkei actually 2% higher. Okay, so and that has a negative consequences on yen, of course. So that's why we had yen under pressure. So now, you ask about pound yen. Consolidation in the near term, there is nothing really to say at this point, my dear Michael, in regards to the intraday picture. A lot of consolidation. You need to stick on the days, the day low and the day high. Any break of them, any break of the day's low, because we have also 1, 2, 3, 4 hourly fractals on that level. A break of it could retest the pivot point, but as you can see, yeah, it's definitely in a consolidation mode. A break of 156 now, which is the high of the day, but also is a round number. It could open the doors further to the upside, because other than the fact that it's a round number, it's also, let's not forget that, actually, how can I show you that? Let me zoom in. Unfortunately, I need to go to the weekly chart to show you. It's areas that we have never seen since 2017. Okay, so extension above 156 could open the doors higher, because it will alert the breakout of 5 years 5 years range. Okay, so as you can see, if the week, so overall, pound yen remains in an upwards trajectory, my dear Michael. Okay, we have golden cross from 50 to 100 weekly moving average over here. In the daily chart, we can see that it has been well supported and is keep extending higher with some pullbacks. And we had that very strong candle yesterday, taking the asset outside this range that we have seen in the whole May. Okay, so overall the outlook remains positive for pound yen, but in order to find next resistance areas, so if the month ends positively and if they manage to break that 2018 territory at 156.50, then the doors will open to 160 territory in the long term. It's our next resistance area in the long term. Okay? Weekly, the very next resistance area, actually it is 160. If it managed to break the 156.50, which is 5 years resistance, it could open the doors to 160. That's a huge, massive move. Now, that's a lot to share, my dear. I cannot share it all. Let me try to read what you're typing. Today, gold future basis, the most active June 2021 contract traded to a high of 1906. Let's get back to gold then. So Alicia says replying to one. So today, actually, yes, Alicia is right. We are in the June contract already for, or we are in the June contract in gold. So which already touch the 1906 level and the low of 1890. First notice day occurring tomorrow, there will be many. Okay, yeah, okay. I cannot read all this right now, Alicia, but Alicia is right. Uh, let's not forget that we are nearly a breath away of month end, so there might be a lot of positions, closing positions. There might be some taking profit situation ahead of the new month and ahead of the new contract as well for gold. So for the time being, apparently, it seems that the markets uh, are okay. Wait a minute. Yeah, yes, actually, um, yeah, there is still the expectations that this rally will continue because momentum is strong. And what Alicia is saying that we might see despite all this taking profit taking situation because we have the end of the month and maybe the repositioning that we might see next week due to the new month, despite all this, the strong momentum, there is a still positive bias for the gold in the so the outlook for gold is still positive. So we might see this rally extending as we moving towards the contract of August 2021. Um, so yeah, that's a lot of analysis from Alicia. I like that. I like. Okay, dollar yen. Alicia put some notes for dollar yen as well. So you're using a 4-hour chart, as I can see. Let's analyze dollar yen as well. Let's start with the daily basis. Key was that the fact that it managed to break yesterday and today to extend this to break yesterday. Actually, okay, it broke yesterday my resistance area at 109.77, so it was April's May's resistance, so it managed to close above it yesterday, and so far today it keep extending higher and is back to 6th of April. So this actually is a recovery of more than 50, nearly more than 60% of the dip that we have seen in April. So as I said, not sure I said it, but I said in the morning, in my morning briefing, the next resistance, the next real resistance for the dollar yen, since it has already broken twice actually this week the 110 level, since it's already broken it twice, the next resistance area is actually back to March April highs, so it could retest the 110.50 territory. Why I'm not getting numbers? 110, 110.60 to 110.95, which is just a breath away from 111. So we have RSI rising higher, positive RSI. We have seen overall the asset, despite some consolidation, having higher lows, as you can see. Okay, we have seen MACD turning positive. Let me just put MACD again in so you can see it. Yeah, have you seen? It was neutral, but it's trying to recover. It's not confirmed yet, but the fact that it has broken this resistance level is putting it in from neutral to is shifting from neutral to positive outlook. Let's check the 4-hour chart as Alicia suggested. So what we see in the 4-hour chart is that continuous breakout and the fact that right now that key resistance that I was talking about, the 109.77, which held for nearly 2 months, is now our support area because it has been maintained for 1, 2, 3, 4, 5, 6, 7 4-hour session. So this now has turned into an immediate support level, with MACD spiking higher, RSI spiking higher and sustaining a move above 70. Fast moving average, all moving average actually are pointing to the upside. The asset broke the first resistance of the day. So dollar yen is actually turning intraday and in the medium term into a positive, strong positive outlook. Okay, this is for dollar yen. So apparently it seems that the breakout of 109.70 attracted more bulls, along with the strong US data that supported dollar. So let's wait and see whether it will manage to touch that level. So this is a key level because it might show it says a key resistance level, and we might see strong resistance over here. So we might see the asset, if it manages to move up here, we might see it struggling to overcome that level. So hi from Nigeria, very much appreciated. So guys, any other questions? I cannot really see. I had that just few people were here. I don't have a lot of questions, neither from Facebook, neither from YouTube, unfortunately. So okay, pound. If you don't have any other questions, I will end the session soon. I will just like to see together pound, oil. What else? Pound and oil and some major stocks in order to end the session with the majors covered. So, okay, we had a big sell-off on pound so far today, actually breaking the 250 period moving average in this 1 hour chart. So sell-off, however, it found some support. Let me go to the 30-minute chart. Dipped lower, so far sustaining a move above the first support of the day. Dear Locke, I just spoke about gold. Overall remains into the upside with momentum indicators supporting a positive outlook. So June is expected to be we are expecting the gold to. We're not expecting, actually. We can see from the momentum that we can see that there is positive bias still as we're moving towards towards June. So there is still positive bias for the gold, but in order to have this confirmation, we need to see a breakout of 1905 level at least. Okay, because so far it's in a consolidation mode, even though in the near term, even though it has been in a rally for 2 months. Now, pound dollar dipped lower, 141.35. Okay, found some support. Don't know, but yeah, negative bias persists. MACD still negative. RSI it has turned below 13. There is further steam to the downside. Stochastic still lower. Hasn't really. It doesn't really confirm a reversal yet, and you cannot see the. And you see over here that stochastic is still doesn't look to be ready to turn higher again. So we still have a lot of bearish bias for pound dollar intraday. However, RSI already started turning higher. Signal line of MACD is close to 0, so this might end out of steam soon. So let's wait and see. A reversal could be confirmed if we at least see the asset turning above the 141.60 level. Okay. So yeah, let's move on. So daily overall, okay, you can see that it's consolidating. Okay, can you see that it's stuck? Let me clear a bit this mess. But can you see that it's stuck the last 2 weeks within this range? Okay, so overall we have been in a rally, but is struggling to take a position, to take a direction the last 2 weeks. That's why the what's going on with my lines? Why I cannot see the value? Okay, that's why a breakout of 140.87, or even actually it's a much better floor over here, 140.98, so 141 clearly, a break of it, okay, which is just a breath away from the 20 moving average, it could um, I could find some selling pressure, but we need to see a breakout of this range, a move and a closure at the today or on Monday below that level in order to suggest that we might see a pullback for pound dollar. For the time being, is consolidating. Overall, remains in an upwards channel. Momentum is positive. Market is positive. RSI is at 57, but it's sustaining a nice move above it. Stochastic is a bit mixed, but overall positive bias remains for pound for cable in the medium and long term, as long as it doesn't break the 141 level, as long as it doesn't move below this 20-day moving average. Okay, now if it turns back up again, the breakout, the desired breakout of this top over here, it could open the doors to, it could literally means more extension of this more than a year rally, and it could open the doors to 143, okay, 143.80, which is takes us back to 2018 levels. And this is what is expected in general. Pound is expected to be well supported, okay, from fundamental side. So a rate hike from Bank of England could support this, support the pound even more than what currently does. So oil moving a bit sideways so far today after it spiked to 67. So for oil is a bit neutral. Actually, we don't have anything exciting out of oil other than concerns in regards to the demand due to the Iran. But yeah, it remains constant. 67.26 was the high of the day, breaking the first resistance of the day. So guys, overall oil remains in to the upside. It has already broken the March 2021 level. I mean, March, April, May, 3 months resistance has already broken and is continue moving above it. So the next key resistance for oil is 67.98, which is the high of the year. So overall, you know that oil is well supported because we have the reopening, we have the vaccine progress, as well. We have also the fact that another thing that supports the Canadian dollar and the oil is the fact that the Canadian economy could benefit from the commodity and oil prices, as we can see over here. So overall, Oil remains well supported, well above all moving averages at years highs, with next immediate resistance level at 67.98. What else? What else? What else? So the bigger picture remains positive. Okay, there is still the uncertainty around supply and demand that keeps the prices, that could keep the prices hammered, um, but the prospect of fresh supply from Iran, something that it was announced over the weekend. No, it was early this week, um, and could actually support the oil even more, because on the other side, even though we might see more supply from Iran, from the other side we had falling inventories from US, so all these are balanced, and again we have oil benefiting. So this is pretty much it. Let me double check whether there are any other questions. I just got my second. Oh, you're spamming me, guys. I'm trying to work over here. You keep asking about gold. Guys, you didn't came on time. I did gold. Okay, fair enough. I will do it again right now, and I will finish with it. Before I shift to gold. This is S&P 500, sustaining the gains that we have seen since yesterday. Sideways, overall, remains to the upside, with even though there is some sideways movement, small body candles suggesting low volume and a lot of indecision, but remains to the upside with positive momentum. So let's go to gold, and let's finish with gold. This is palladium. Sorry, where is my gold? Gold. Okay, guys. Okay. So first of all, let's start with the let's start with the 1 hour chart first. We had that dip on actually ahead of the data, that was ahead of the data, prior to the data. Once the data came out, we have a big jump. This might be positioning from the new for ahead of the new month. This might be some flows, safe haven flows ahead of the new month. This might be some profit taking. Who knows? It's the end of the month. Actually, the final day it will be on Monday. But if I'm not mistaken, on Monday UK and US is on holidays. Are on holidays, so that's why this might be profit-taking situation, as Alicia said, and some positioning for June contract ahead of new month. Okay, so we have seen what you need to stick on it is looking the technical side of gold. We have seen this in the 30-minute chart. We have seen this rebound. We have a breakout of pivot point. Okay, let me check we have a breakout of pivot point. The asset reached the 1899.92, so just literally below the 19,000 level, the 1900s level. So in the near term, actually right now in the 1 hour chart, okay, we have a bullish cross of the 5 and 9 exponential moving average. Okay, bullish cross from my 5 and 9 moving average, and they keep pointing higher. RSI cross above 50. Stochastic had a bullish cross earlier, and they keep extending higher, suggesting more positive bias. I will flip to the 1 hour chart. The same stance over here. RSI above 50. My fast moving average are pointing higher. The asset broke pivot point. Stochastic, okay, MACD is neutral, but there is positive bias for gold intraday. So next levels to be seen, next resistance level would be the confluence of the first resistance and the latest up fractal at 1903, and a break of it we could see the asset finding more buyers, which could boost the asset at these week's highs and the 1911 or even 1912.60 territory. So intraday positive outlook. Let's see the overall outlook. The overall outlook remains positive. So let me get rid of some lines over here. I want to get rid of the pivot points as well. So overall, we have seen the asset rallying since the 26th of March and this double bottom over here, right? Rallying. We have a bullish cross of 15,200 moving average, day moving average, but unfortunately, the last few days, the last 2 weeks, even though we had a slow rise, the candles are very indecisively are very small body ones, so there is not a lot of momentum in order to suggest that this rally will continue. That's why the medium term picture, the daily term picture remains neutral to positive. Why is neutral to positive? Because we remain in a rally, we remain above all moving average, well supported without a pullback so far, decisive pullback. MACD is positive, RSI is positive and is sustained above 70. So everything is suggesting a medium-term positive outlook as well. But we need a confirmation whether it will keep this rally will get extended or whether it's time to it has run out of steam. Only a break of the recent high at 1912, only a break of that level today or next week, who knows, only a break of that level could open the doors to the 1950 territory over here with immediate resistance at 1930, the very next one 1950 to 1960. Okay, and the very first one would be the 1930. That could open the doors to these areas over here. However, if we don't see that and instead we see a pullback, only a decisive pullback down to 1850 and even more precisely at the 20-day moving average at 1848 could suggest that this rally has run out of steam and is reversing. Only this could change the positive outlook that we can see for the gold. So hopefully this helped you guys. I need to end the session. Please, I need help with opening a live account. Dear, I cannot really help you right now. Please visit www.hotforex.com, sorry, our website. And there is, at the very top, there is a live chat. If you click on it, one of our agencies will be able to assist you right now. So go to the www.hotforex.com. Okay, and let me type it down actually. So visit our website. Okay, guys, on the very top. So on the very top there is a live chat, and our support team could help you 24/7 over there, 24/5 over there. So thank you very much for attending. Take care. We're just a breath away from month's end anyway, so don't try to make sense of what you see. Just trade what you see on your charts. And risk management first and most important of all. So Yeah, Monday is a bank holiday for UK and US, if I'm not mistaken. Let me double check. Yeah, it's the Memorial Day weekend. It's a long Memorial Day weekend. So UK and US will be closed on Monday. So we are expecting low volumes. Very choppy moves are expected because of the lack of volatility of volume. We have the month end duration bid right now, and we might see it over the weekend. So take care. Trade what you see. If you don't see it, then it's not there. Don't trade it. Okay. Thank you. Hope you're having a great day ahead. Take care and see you again on Monday. Thank you. Bye bye.